Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. And we are overflowing today with all kinds of stuff. We'll have to get real quick. Our email address, thefairtaxguys@gmail.com. Encourage people to write us or like us on our Facebook page. But this is the first episode of FAIRtax Power Radio that we're recording after the Republican tax reform proposal has been made public. And we're going to go through this little sucker with a fine-tooth comb and show you what's really in it.
Yeah, I want to thank Congress for giving us so much material to work from here.
Oh, and speaking of Congress, real quickly, our tax reform change watch.
Yeah.
All of the proposed changes to the tax code, it's, as you might imagine, it was 999 last time we looked. That was a couple of weeks ago.
Yeah.
It is well over 1,000 now, 1,049 proposed changes to the tax code. At least that's how many hits you get if you go to congress.gov and scan on the string Internal Revenue Code.
Yeah, we should call this the Congressional Tinkering Watch. Because that's what they're doing. Congress is always tinkering with the tax code. Okay, well, let's get right into this thing, analyzing the Republican tax plan that has just been announced a couple of days prior to our recording this. And I was looking through some of the media, trying to get what's actually in there. And the spin that's out there is just incredible. Of course, we all know that the media as a whole hates Republicans. So they are spinning this thing as negatively as they possibly can. An example, they'd say, the reduction in the corporate tax will put the U.S. under the 22% average for the industrialized world, but it will be expensive. They will add $1.5 trillion to the debt over 10 years, and it talks about getting rid of valuable tax breaks and how eliminating personal exemptions, that means that a family of four can no longer reduce its taxable income by over $16,000. So if you're looking at some of the regular media, financial media, to get your information on what this is, take that with a grain of salt, because those guys have an agenda, no doubt about it. So we went straight to the bill and looked in the summary of what the bill does. Yeah.
And there are a bunch of bullet points here. Let me go over a couple of them. With respect to individuals, they call this thing the Tax Cut and Jobs Act. It's H.R. 1. And from the bill itself, it says, respect to this, the individual will get reduced from 7 existing tax brackets down to 4, 12, 25, 35, and apparently they're going to now keep the 39.6, which is the top tax bracket now. They were saying 3. The bill says 4. Increase the standard deduction, repeal the deduction for personal exemptions. Now, you look at that and you say, wait a minute, what the left hand giveth, the right hand taketh away on that thing. So the net result of this thing is going to be pretty much a wash. There is not going to be a tremendous amount of reform in this thing.
No, except that you kind of have to agree with the media in some respects. And like Bob says, they're taking away with one hand and giving you with the other hand. The tax rates are coming down, which is good. The corporate tax rate's coming down and so forth. And, the media needs to look at the corporate tax rate dropping in a dynamic way, because that will stimulate the economy, which will, and it's been proven time and time again, when you get the economy going, reducing tax rates produces more revenue to the government. And no matter how many times that happens, they ignore it. But on the personal side, they're reducing the number of brackets, they're reducing the rates, but at the same time, they're taking away a bunch of deductions. Like Bob said.
The idea is to make it simpler.
Yeah.
They're trying to simplify.
Oh, yeah, they're making it simpler by removing all these deductions, Bob. So what the one hand giveth, the other hand taketh away. And it's crazy. And I've done, both of us have done a lot of research. I've done a lot of reading. I've listened to some of the talk shows and so forth, and the people calling in. By the way, one of these other talk shows seemed to have a resident CPA like we do.
Oh, really?
Yeah. So the guy called in a CPA from California.
Speaking thereof, we're going to be talking to Jade Wally, our CPA friend in Colorado, here shortly on FAIRtax Power Radio. He wrote us something the other day and says, you really need to talk about how the fair tax is going to impact the working poor. Yeah. So we're going to discuss that with him here in a couple of weeks, and of course, get his take on this as well. Let's just say that's a coming attraction on FAIRtax Power Radio. Check it out.
We can consider Jade It's FAIRtax Power Radio's resident CPA. What do you think?
I think that's a wonderful idea. Go ahead with your list over there.
Anyways, now, first off, if you go to the House Ways and Means and you look at their site, this is the greatest thing since sliced bread. I mean, it's all good, you know. lower the rates for individuals and families, double the standard deduction, enhances the child tax credit. That's good. Eliminates loopholes for wealthy, protects bedrock provisions for middle class. That's class warfare.
It's interesting. Yeah, you say eliminates the loopholes for the wealthy, but if you listen to the other side, this whole thing will say, oh, this is just nothing but a big break for the wealthy. So you cannot listen to the political rhetoric from either side on this thing. You will be confused to the highest heaven.
Now, this part repeals the death tax and the alternative minimum tax. That's good. I like that. The only thing is it does it over a period of time, or I'm thinking of something else. Anyways, it repeals those things. Creates new lower tax rates for small businesses, drops them down to 25%. That's good. You reduce the tax rate on businesses. They can do more business and hire more people.
Yeah, let me back this up a little bit. You're talking about repealing the death tax. One of the comments I read about on the media when I was looking this up says, oh, but that only affects 0.2% of all estates and amounts to a tremendous break for the wealthy. You know, it's the most progressive part of the income tax code, and these mean, ugly, nasty Republicans want to get rid of it. I prefer to save family farms and save family businesses and stuff like that. So.
Yeah, it does. It does.
Oh, well.
To create jobs and promote competitiveness lowers the corporate tax rate for the large corporations, boosts the economy, and allowing expensing of capital investments. So you have a large company and they have to buy a truck. I mean, a big truck, commercial truck. And it costs like $70,000 or $80,000. They can expense that in 1 year instead of spreading it out over 5 years. Mm-hmm. That will help them. Let's see, the last one here brings profits back home, and they're talking about the repatriation tax because right now you have American corporations that have a branch overseas. They make stuff overseas and they sell it overseas, and their profits stay overseas because, one, they get taxed by the country that they're in. Two, if they bring those profits back to this country, they get hammered by a 35% repatriation tax. So they don't bring it back to this country. They leave it over there. So that's American dollars, trillions of American dollars that sit offshore instead of helping our economy. So those are the good things. But of course, when you get something from the House Ways and Means, they're going to point out only the good stuff.
Of course. What else they're not saying here is this, as it is written, it's called H.R. 1. Now, you can look that up on Congress.gov and read all 400-plus pages if you want to. But what they're saying, that is just, as is proposed. I can guarantee you as that gets debated, as it goes through committees, as it goes onto the floor of the House, on the floor of the Senate, you're going to see amendment after amendment after amendment after amendment offered. Not all of them will be adopted, but this thing is not going to come out looking like it does right now.
No, that's true.
They are going to muddy it up, and again, the lobbyists are licking their chops over this thing.
Well, and the Senate is yet to propose their bill, too. And from what I'm reading, it's not going to be all that similar to the House. So, it's going to be... So the House passes theirs and the Senate passes theirs, assuming they can get their act together, and then they have to reconcile the two.
Legislative sausage making is not a pretty thing to watch.
That's a good analogy. So anyways, I after doing as much reading as I could and listening to some talk shows with some very authoritative people, I wrote down some things here. Permanently lowers the corporate tax rate from 35 to 20.
Permanently until the next Congress gets a hold of it.
Well, that's true. Yeah, because we just, Bob just read off the number of tax proposals. As long as it's an income tax, Congress is going to be tinkering with it. So, yeah, you don't know. Repatriation tax reduced from 35 to 12 for cash and 5 for non-cash. So bringing that money back here will be a good thing for this country. Reduce the tax brackets to 4. 12, 25, 35, and 39. However, I also heard later that there is a special provision somewhere in this tax code with a surcharge for the mega wealthy that actually puts their tax rate at like 46%.
Oh, I hadn't seen it. And they conveniently don't tell you that in the summary of the bill that you read on Congress.gov. It just says the 4, 12, 25, 35, 39. Of course, it does not tell you, what income levels are going to apply to each of those brackets.
Yeah.
That is yet to be determined. A lot of this bill is still kind of fluid, and that's what some of the spin in the media was saying too. They were hammering on it for, it lacks specifics on how this is going to happen. It's just an idea. It's just a framework. And I guess they're kind of correct in that it is just a framework. It's going to get twisted and tortured as it goes through the legislative process. And we'll see what it looks like when the House gets one bill, the Senate gets another bill, and they try to reconcile the thing.
Oh, yeah.
And what it's going to come up with. I think they've got some good ideas. They have some good intentions.
Yeah.
They're just going about it the wrong way.
Yeah, that's true. Let's see. Death tax phased out over 6 years. Well, what's going to happen within 6 years?
That means you better not die for 6 years.
Yeah. And several new Congresses, every 2 years, something will happen there. If the Democrats take over the House or the Senate, that's going to be one of the things that they do, whatever. So increased child tax credit from $1,000 to $1,600. That's good. Standard deduction just about doubles, but as Bob already mentioned, the standard deduction doubles, but the personal exemption goes away.
Yeah, well, they were saying that the doubling of the standard deduction is to encourage more people not to itemize. You make the standard deduction big enough, then you don't have to go through all the questions to itemize your deductions when you're going through TurboTax and it asks you all this stuff, and at the end of 45 minutes later it says, "Oh, you should take the standard deduction."
Yeah,
that's going to be even more prevalent now if this passes as it's proposed.
Okay, it takes me more than 45 minutes. Anyways, see, standard deduction preserves a retirement savings account, 401ks and stuff. That's good. Oh, this one. I love this one. Deduction for state and local taxes.
Oh, there's going to be a cat fight over that.
Yeah, capped to a max of $10,000. Now, there was an article. This was last week from this recording, before the Republicans put out their tax plan. And it was about, what's going to happen when they put their tax plan? And there's this one paragraph. The president said he was hopeful that the House would approve the tax bill by Thanksgiving, that he could sign into law by Christmas. But his overly optimistic timetable didn't address the concerns of lawmakers from states such as New York and New Jersey who have opposed a proposal to eliminate the federal deduction for state and local taxes, arguing it would hurt their constituents and subject them to being taxed twice. Well, yes, they are being taxed twice because those states have a state income tax along with their federal income tax. Whose fault is that? So they apparently they think it's just hunky-dory if the rest of the country kind of subsidizes their state and local taxes. So,
but I'm listening to all this, Ron, and I'm thinking, why do we have a system that is prone to this kind of catfighting and prone to this interest against this interest, against this interest, against this interest, and everybody's in there fighting for their piece of the pie? Why do we have a system that even allows that?
Yeah, it's like,
that is insane that we the people allow that to happen.
Yeah, one thing about beating your head against walls, it feels good when you stop. But and there's a bunch of other things that I've recorded here. We're losing under this plan. There's a lot of deductions that would be lost. No more medical deductions, no more moving and employee business expenses. Those deductions are gone. Casualty loss, that's gone. HSA, they're eliminating HSAs. My wife and I had an HSA before we went on to Medicare.
Define HSA for people who don't know what that is.
Okay, that's a health savings account. You purchase a health plan that has a high deductible. That makes the plan more affordable. The premiums are lower. And as a part of that plan, you have a health savings account, which is pre-tax money. You take money out of your salary or whatever, you put it in this special account, which is a health savings account, and you're not taxed on that amount. So that was a good thing. We took advantage of that. Really, when we were running our own business, that was a big savings to us because we could get a more affordable health care plan. And if something happened, which it did, my wife had a bout with cancer, and we could take money out of the HSA and pay for the upfront expenses, and the health insurance paid for the rest of it. So that was a big deal for us. Mm-hmm. They're going to eliminate it. Why would they want to eliminate that?
I don't know, but I'm getting back to this. You're talking about folks are complaining about all of these deductions are going away.
Yeah.
And the proponents of this bill would say, but we are doubling your standard deduction because that means even if you took all these deductions, it would not add up to the new standard one. So we're going to let everybody fill it out on a postcard.
Yeah, so there was one.
I've got a bridge. I've got a bridge in Brooklyn. And I've also got some oceanfront property in Kansas City. I'll sell you if you can believe that.
There you go. Yeah, yeah. So, like Bob says, there's a whole bunch of smoke and mirrors behind this thing, and it's unbelievable. And so, for the media taking pop shots at this, I can understand it because there's a lot in here to criticize. And the point of our podcast today is why, and Bob has already said this, why are we beating our head against the wall with this tax code? We started the program with the 1,049 proposed changes to the income tax. Congress will never stop tinkering with an income tax as long as it is an income tax.
I wonder how many amendments are going to be offered on each of those proposed bills.
Oh, yeah. And why are there so many amendments? Why are there so many proposals, Bob?
Oh, because we've got so many lobbyists and so many different special interests, each wanting their little personal carve-out, their personal preferential treatment over what everybody else gets. And these lobbyists get paid a lot of money, and they pay the Congress critters a lot of money in terms of campaign contributions.
Yep.
It is a corrupt system. And we, the people, are just sitting by idly and letting it happen. Doggone it, these folks work for us. We need to straighten them out.
Yeah, yeah. And keep in mind, along with that lobbyist thing and the campaign cash that they keep throwing at the Congress critters, one half, a quick search on the internet, I will show you this, one half of the people serving in Congress, in the House and Senate, are millionaires. One half.
I'm surprised it's not more than that, considering how much it costs to run.
Yeah, that's right.
Of course, they run on other people's money. It's usually the lobbyists.
One of these days, I'm going to do some research and find out how many of them became millionaires while serving in Congress.
There's a good one. I bet you'll find a bunch of those.
Don't have the answer to that one, but one of these days I'm going to look that up. But that is a terrible relationship. Terrible for the American people. It's good for the Congress people because they get all this campaign cash that when they leave Congress, they keep the campaign cash. Okay? Mm-hmm. Yeah, so how nice for them. But this bill here is riddled with all kinds of things. As I've said before, it is the Tax Lobbyist Job Security Act of 2017. That's what it amounts to. It ensures that the lobbyists have plenty of work to do for years to come. And there are some good things in there, but there's a lot of bad stuff. And
but the good thing, the effect is temporary. It will last until another Congress down the road goes to messing with it and puts it back just like it is now.
Yeah, it's unbelievable. So it'll never be stable. Lack of stability, congressional tinkering, whatever you want to call it. And don't forget the evasion that we talked about before. I don't think we've mentioned that.
There's not a single piece in this legislation that even addresses that issue.
Well, they can't. I mean, as long as you've got an income tax and you've got an evolving American economy where people are being making money in very creative ways. You and I have talked about this. That gives your traffic light there.
Oh, my railroad signal.
Yeah, your railroad signal. That you contracted with a guy to bring it from Texas. He put it in the trunk of his car, brought it here. You paid him the amount, so forth. People are earning a living in extremely creative ways, and it's all possible because the internet makes these personal connections possible like we've never had before. So people are doing all kinds of new things to create money for themselves, create a living for themselves, and a lot of it doesn't get reported. There's no W-2s involved. Mm-mm. So there was a time when the vast majority of us worked for somebody else and we got a W-2. Those days are gone, and it's getting worse. So evasion is a huge problem. This year alone, it costs every household a total around $5,300. That's in increased taxes and increased costs of goods and services because other people are evading the income tax, and those of us that are paying the tax and buying the products have to make up for it. So evasion will continue to be a problem. And again, why are we putting up with this? Yeah. Why do we keep beating ourselves over the head?
That evasion is the one thing that the Congress critters are not going to talk about. But I say we keep listening. We've heard this over and over and over again from this proposal, from the Ways and Means Committee, from the President's Job Act. That one of their all things that they're just really high on. We need to simplify the tax code. So we're going to cut the number of tax brackets. We're going to get rid of all these individual deductions and give you a bigger standard deduction. That's simplification. No, it isn't. That's tweaking. If you really want to simplify the tax code, this bill, H.R. 1, is over 400 pages. Which means it is almost 4 times the size of the FAIRtax bill.
Yeah, that's a good point.
So if you want to look for simplicity, just look at how many pages are in each bill. The FAIRtax bill, 131 pages. This one, over 400.
Yeah.
And that's 400 pages that's being added to the current tax code. This isn't repealing anything. This is just changing some parameters that are already existing within the tax code. So this code will make the tax code more complicated than it already is. It will not simplify. Might make the filing procedure a little simpler for some folks, but it does not simplify the tax code. It doesn't. Don't buy that lie, folks.
Yeah, and you'll notice, again, going back to the figures that Bob read off of Congress.gov for the number of proposed changes, they all start with to amend the Internal Revenue Code of 1986, because in 1986, the Reagan administration, working with Congress, completely destroyed the tax code and rewrote it again, started from scratch. They're not doing that
I
this
would love
year.
repeal the Internal Revenue Code of 1986.
Well, that
and
would be
replace
good.
it with a fair tax.
But these folks aren't doing this. All this stuff, even if they're eliminating some stuff, it's going to be more language in the current tax code. They are not replacing the current tax code. They are adding to it. Yep. Even though they're taking some of our deductions away, they're adding to it. So the language increases. These 461 pages, they become thousands of pages of regulations when the bureaucrat get done, and then instructions, and then there'll be court challenges, and that all becomes part of the tax code, and we're responsible. So heavens knows how many more pages this thing is going to add to the tax code that we're all responsible for.
And the provisions are going to change from year to year to year as the future Congress critters get a hold of this thing. And the lobbyists whose deductions were eliminated this time, they're going to want to buy those back.
Yeah, that's right.
No doubt about that. And there'll be a lot of folks getting reelected with lobbyist cash by letting them buy these tax favors back. And it's just a rotten system that we need to get rid of.
And the whole thing, again, is completely unnecessary. All this stuff, all the time that Congress is spending on this, all the news reports on these proposed changes to the tax code, all this is completely unnecessary, because if we got rid of the income tax and replaced it with the fair tax, that's it.
Well, the biggest thing you're going to hear about on this plan is how it's going to reduce the number of tax brackets from 7 to now 4. The fair tax reduces it from 7 to 0.
Yeah.
How it knocks back the corporate tax from 35% back to 20%. The fair tax reduces it from 35% to 0.
Yeah.
You talk about compliance costs. You are still going to have to hire tax attorneys. You're going to still have to hire CPAs, accountants, tax attorneys, and whatnot, and what have you, to comply with this thing. Those compliance costs, the fair tax reduces to nearly 0.
Yeah, greatly reduces. Yep, that's absolutely right.
So our fair tax does what they say they want to do a lot farther than the proposal that they're coming up with now, which tells you they're just talking out of both sides of their mouth and wanting to sell you, a little rearranging the deck chairs on the Titanic and calling it major tax reform. It's not, folks. Don't buy it.
No, it isn't. It isn't. You need to contact your Congress people and tell them, that the only real tax reform is the fair tax. All right, we need to get rid of the income tax altogether. All right, they're going to come to this at some point. The income tax is going to fail under its own weight. It's going to implode.
Well, because they're not addressing the evasion issue.
Yeah, exactly.
The fair tax addresses the evasion issue just by the nature of the thing. You pay the tax when you buy things. It's not dependent on what you make. It's not dependent on how you make it. You pay the fair tax when you buy things. And people that are currently evading the income tax because they're not getting W-2s, they're making their money other ways, some of it by less than legal means, those folks buy things.
Yeah.
They become taxpayers under the fair tax. What is it Randy says, that the current tax code makes criminals out of honest taxpayers and the fair tax makes taxpayers out of criminals?
That's true.
I like that. Good job, Randy.
That's a great way to put it. Yeah. And the evasion is a huge problem. It's only going to get worse every single year. The congressional tinkering, well, they actually like that. It's not good for us to have to keep up for the tax code, but that's Congress doing messing around with the tax code for fun and profit. So they don't mind the congressional tinkering. But all this stuff is going to eventually have the income tax. At some point there's going to be more evasion than there actually is tax collection, and some bright young person in Congress is going to say, "Hey, this ain't working. What can we do?" And we'll be right there. Excuse me, Mr. Congressman.
Yeah,
we've had the solution here for about 20 years now.
Yes, right. This has been out there every year since 1999, and you really haven't looked at it. And I'm wondering when the embargo is going to be broken. Oh. Somebody somewhere up there has to have given the orders to the punditry and to the Congress critters. Shh, you just don't talk about the fair tax.
Yeah. Yeah, it's like the fix is in. So they're going to tenaciously hang on to this antiquated tax system. Remember, it is a 19th century tax system trying to keep up with a 21st century America. It's not going to work, and at some point it's going to implode. Will Congress address it before it becomes a crisis? That is the question that we can't answer. We hope not. We hope enough of you hammer your Congress critters to make sure that they're aware of this. And, if you go to town halls, don't be the only one going to town halls talking about the fair tax. Make sure some of your neighbors get in there. We talked about this in one of the previous episodes.
And we've also said if your Congress critter is a co-sponsor of H.R. 25 for the fair tax, thank them for that. But hold them to becoming more than just a co-sponsor. If you just put your name on the legislation and you're still out there, like some co-sponsors we could name are doing, and talking about everything except the fair tax, then we need to hold them accountable for that as well.
Yeah, that's right. Because it is, eventually we're going to have to go to the fair tax. We need to do it before it becomes a crisis. So we the people need to push this along. And that's why we keep doing this FAIRtax Power Radio, and that's why we ask you, tell other people about FAIRtax Power Radio. It's one of the easiest ways to learn about the fair tax. You'll listen to this simple 30-minute podcast or online episode every week, and you eventually gain a lot of knowledge. Now, if you really want to learn, get the books, the FAIRtax book by Bortz and Linder. You can get that at Amazon or Barnes & Noble or one of those places.
Indeed, okay. And of course, there's a lot of good information at fairtax.org, and if you want to get involved, bigsolution.org. We've got a couple of programming notes here we've got to get into before we get away. We're going to take kind of a Thanksgiving holiday break.
Yeah.
A while back, we had a really cool episode of FAIRtax Power Radio, the FAIRtax Helpline. Just kind of a hypothetical situation where the fair tax is passed, the income tax is gone, and we've got this special hotline for people to call up and ask questions about their tax situation. We're going to replay that one the week of Thanksgiving week, because we're just going to be lazy and take Thanksgiving week off. And then the next week after that one, if all goes according to plan, we'll be talking to Jade Wally again. I want to get his take on the Republican plan here, and also get into the research that he said he would do about how the fair tax is going to affect the working poor.
Yeah, and Jade does some great research. I mean, we've talked to him before.
Yeah, I tried to talk him into getting on an airplane and flying out to Florida again just to talk to us, but I think we'll have to talk to him on the phone this time.
Yeah, I think that'll be a phone interview this time, but yeah, that'll be good. I'm looking forward to that. Yeah, and that FAIRtax helpline, turned out so well. Yeah. So that's going to be some fun to look forward to. And it's an entertaining way to learn about real taxation, the only real tax reform, which is the fair tax.
Absolutely. I think Jade is a young guy. I mean, he's got a lot of his working career ahead of him. He has got a vested interest in working under the best tax system possible. And, from a CPA's perspective, he sees a lot of things that a lot of other people don't. So please don't miss that here in a couple of weeks on FAIRtax Power Radio. We'll be talking to Jade Wally again and focusing on how the fair tax affects the working poor.
And this episode airs right after our November Facebook Live. But as soon as we figure it out, we'll get the next Facebook Live to you.
I tell you what, time flies when we're having fun. We are flat out of time for this edition. So I'm Bob Paxton.
And I'm Ron Molero.
The FAIRtax Guys reminding you again that the fair tax is America's big solution. And once you understand it,
you'll demand it.
Fair tax is coming. Don't stand in the